Last week was the first week of Q4, and I hope that the rest of the quarter doesn't go as scary as we ended that week in an absolute flash of red. The only thing that was up was gold and the VIX. VIX measuring volatility and fear. Fear absolutely spiked. Now, the biggest question that we have to answer in today's video is the AI rally over? And I'm going to keep it very simple. The fact that rare earth stocks, which are part of what is needed to fuel the AI rally, are absolutely soaring since Friday till today tells us that it's not. It tells us that the AI rally is in full force, and any single stock or company that touches it is going to be on fire and is going to be absolutely rocketing higher. Now, I've got a small cap for you and a little AI small cap that we've traded successfully before. And at the moment, as of today, as of right now, it's my favorite. Now, I said it that way because things are changing. Everything's changing. Anything could happen. The market could continue lower from here because we're still expecting a reasonable 4 to 6% correction. Now, Friday alone was just under a 4% correction, and so that could be all that we get. I'll take you into the charts and show you how we could measure that and how we might get a clue as to which direction the markets are going to go from here. But we've got to follow the charts. And we're still in a possible scenario where we could be getting the rest of this reasonable correction. Markets do not just perpetually climb. They have to be stress test. And I had been warning through the tail end of September, and I said it's very possible first week of October might be when we get it. I was warning that at any given moment, we could get that stress test. Well, we got it. Now, do I think that the AI rally is over? Well, no, I covered that. No, absolutely not. Do I think that the bull run of 2025 is over? No. I actually think that there's a ton of money sitting on the sidelines, and the fact that gold is at an all-time high is an indication that there's a lot of people who have yet to participate in this AI rally. There's still a lot of money that can roll over into AI as stocks continue to climb. Now, Donald Trump kicked this thing off with reigniting the tariff war with China over rare earth minerals, threatening an additional 100% tariff. They're not coming to the table. They don't think they have to, which does leave us in a situation that if these tariffs remain outstanding, it ultimately will continue to fuel inflation, which will become a bigger problem for us as we go further down the road, making it impossible for the Fed to cut rates. This is the tension in the market right now. If we keep pushing the cost of goods higher, the Fed cannot afford to fuel that problem, getting it wildly out of control. It is a legitimate threat, and it absolutely could continue to weigh down the markets. Now, here's what I think should be done. We need to follow the charts. Let's let the market do what it's going to do. Let it choose a path. Let it reveal itself in those red or green candles. And after it does so, then we'll take or assume risk positions. In this environment, there's going to be stocks that have pulled back that I'm going to want to buy. There's going to be underdogs that had been down for the last 3 years that are going to begin to come up a little bit and show a sign of life, as through the bearishness of the market, there'll be the closing of those short positions and those stocks will begin to rise. I've got one of them I'm going to talk to you guys about soon. Today's video is primarily going to be about a review of the SPY and one small cap stock that I think is currently moving higher that everybody needs to be paying attention to. Welcome to Wall Street. This is the Stocks with Josh show. Thank you for joining me today. Thank you for dropping a heart in the comments and just saying hi. Thank you for hitting the like. And if you need help understanding, interpreting, and forecasting, and just hearing my predictions on what the market's going to do next, hit the like and the subscribe. Appreciate you guys joining me today. All right, let's kick things off by first going to the SPY. I'm going to give you a sense of what it is I see and what it is I'm going to be watching. Okay, we talked about this just last week, that what we didn't have and what we were likely going to get, which would signal a potential correction, was an engulfing candle. Well, these are weekly candles you're looking at, and last week's engulfing candle not only consumed the previous week, but it consumed the previous 3 weeks. So it was a pretty bearish engulfing candle. Now, today's move that we're getting is a compression candle, and it's kind of a small inside candle. And ultimately, on Monday morning, the markets stopped falling and they popped a little bit off the bottom, but they put us dead center to this sell-off, and they're simply taking a pause to determine what their next step is going to be. Is it going to be a down move or an up move? And I want to take you back in time from the last time that the market did this, which is right here. And we're going to look at what it did throughout the rest of that week and how it finished after the engulfing candle, how it canceled the engulfing candle, and that would tell us what this week needs to do as well. So the last time this happened, you can see that we got this red bearish engulfing candle, and it actually did the exact same thing that we just did. It engulfed the previous 3 weeks. Same thing as we've done right now. Okay. And that following Monday, it jumped off of its lows. And as that week progressed, it slowly went up until it finished the week out at the exact same price of where the sell-off had started the week before. So let's keep it very simple. That's what we've got to do now. We've got to slowly progress and build our way back up to right around 672 and close out the week for us to believe that this down move is going to be canceled. Now, personally, that would be shocking because, as I've been saying for quite a while, that's not quite the stress test that the market's looking for. In previous up moves, you can see this yellow moving average line represents the 9, and the blue moving average line represents the 20, and you can see how often the 20, not just the 9, gets tested repeatedly over the course of months. And you can see right now that we've not tested the 20 even one time. Now, let's go further back in time. I want to show you something I showed you in a video some time back. This is the way the market behaved back in 2022 when it had found its top. This kind of reveals what a breakdown scenario might look like. And we had these engulfing candles. So you can see that right here, we had this engulfing candle, and it engulfed the previous 3 weeks, just like we've done twice in the last couple months currently. And then after we got that, you can see that we actually went all the way back up to the top of the range, where we lost steam and momentum again, vacillated, went on to make a brand new all-time high, but then we got another bearish engulfing candle. It's the second that we had in 2022, back to back, 1 and 2. After receiving 2 bearish engulfing weekly candles, the market freaked out, and that began the journey of a descent over the course of 2022. So, to be clear, that is not the pattern that we have just yet. And if we were to go by that pattern, it would actually suggest that we could still yet make a brand new all-time high. We're going to know a lot depending on how this week finishes off. If we continue to melt down to the bottom of this bearish engulfing candle that we made last week, in my opinion, we're absolutely going to go on to test that 20 EMA, which is going to put us somewhere right around 648 on the S&P 500. So things absolutely have changed. We're no longer in that steady climb higher that's being untested or unchallenged. The market's come along and said, yeah, it's gotten frothy enough. We're going to mix things up a little bit. And that's what we saw. Now, first week of the quarter of Q4 has started off absolutely in a flash of red, but we have Q3 earnings that are not only this week, but next week we're going to begin to get big tech, and that's going to tell us a lot about how strong the AI rally is. Now, personally, I think the AI rally is strong, and we're seeing some AI stocks fighting their way back up to the top. And it's the ones that are moving the quickest that I want to be paying attention to and bring to your attention. And that one right now for today is going to be BBAI. Now, I'm going to take you into that chart. And obviously, if you're following it and if you're in it, you know this thing is a rocket ship. And the last handful of times I've talked about it, I've said you want to have a stop loss in. But personally, I'm too afraid to sell this one right now because I think the opportunity is really just beginning. Now, use discipline. Have a plan. You're going to need patience. You need a stop loss. You're not going to be able to wait for me to talk about BBAI in my next video to get direction on what you should do. But right now, it's moving higher, and you need to be paying attention to it because it's a winning stock. Let's go check out that chart. All right, big picture view. I'm in BBAI, and I expect this thing to get up to $20. And I'm prepared that if it were to pull back, I would want to be a buyer at all of these levels that you see marked on my chart. But I want to highlight this $8 level because this was the trigger that confirms the move back up to 10. Now, I think we're going to see some resistance at 10, but I would like to see us flag above this descending parallel channel. So we've got obviously a cup that fed into a descending parallel channel. And what I'm saying is that if we can flag between 8 and 9 one more time, then I believe that we're going to break out and we're going to begin to hit some of these levels of resistance. The first one is going to be between 13 and 14. Now, I have no guarantee as to what BBAI will do, But one of the things that I like to look at in a small cap play in any stock is when the market begins to sell off, do they become outliers? What is an outlier? It's a stock that doesn't go with the bear herd as it goes south. It continues to climb. It tells us a lot about the move. It tells us that the high level of shorts have a huge potential of getting squeezed here, because if the market goes bullish again, this thing absolutely could double. But in this environment, all the more you need to use a stop loss. Last week in the Stocks with Josh Pro Trading community, we had a couple trades that we got kicked out of because we have a negative 30% stop loss. We like to ride our winners as high as we can, but we don't accept anything more than a 30%, which is actually quite big. So it was painful to get kicked out of those plays. But as the day unfolded and we saw which direction the market went, if we hadn't allowed our stop losses to kick us out, we might have been down 50, 60, 70, 80, or even 90. That's why using a stop loss is one of the disciplines. Now, we had some beautiful winners in there already today, and I'm hoping for a great week. The market's going to be volatile, so we've got to consider that in this particular week, if you won in July, August, and September, and we got a couple 100% moves in the first week of October, you want to make sure that when things do get choppy, as they are right now, you've got to become more of a sniper, and you got to watch your position size, because holding anything overnight as far as being a swing trader could be a huge mistake, as with the market news is going to drive the next move. We're following the charts. I hope that my analysis of the SPY was helpful, and let me know if you're in BBAI with me. I'm already enjoying some profits today, and it's looking good for tomorrow. Peace and blessings, my friends. Hit that like and subscribe. I'll see you in the next video. If you need better trading tools, check out this limited time offer from the Moomoo investment app, where you can get up to $1,000 of NVDA stock just for making a deposit. Plus, they're offering 8.1% APY for your uninvested cash for the first 3 months, and 4.1% after that, which is still better than most banks. So your money is actually working even when you are not trading or even looking at the app. Now, I'm going to show you guys some features that I really like about Moomoo. I've always enjoyed these features. Let's go look at them. I'm a huge fan of their earnings calendar. When a company reports, you can just tap the earnings tab to get all the important data. You're going to get the revenue, the earnings per share, as well as the latest company news all in one place. And then there are the zero commission fees on US stocks, ETFs, and options. That's not the case for every popular retail platform. Whether you trade every day or you just simply check on your investments, every once in a while, you pay no hidden fees. Check it out on their website, read the fine print for yourself, and consider whether or not Moomoo is right for you.